Alright, what's up guys? Good morning. Top of the morning to you. Happy Sunday. We're going to go on ahead here and jump into the notes for the week of October 10th. So I just got off the mic with the members of my mastery group, and we did our typical Sunday prep session. The word that comes to mind is fucked. That's how the market is looking right now. And I try not to curse with you guys too much, but got to have a little bit of emphasis this morning. So the theme heading into this week is that the bears might have a full tank of gas, which of course could be problematic. So we're going to cover the failed attempt to turn the ship around last week. We've got to cover the pieces of the puzzle, the VIX, the dollar, HYG. We're going to cover the fallen kings, Apple, which I am short right now, Tesla, which we were short, and Amazon, which I'm also short. But more importantly for today's video, I want to cover the things I'm seeing in the monthly charts that point towards we ain't seen nothing yet. This is just the beginning. And then we got one bright spot for the market, the energy sector. One bright spot. So as far as the failed attempt from last week, guys, and I think I mentioned this in the last video, during these bear market bounces, day trade them, wine them and dine them, take them out to lunch. Don't take them to bed with you. Until the structure changes, you might not like what you wake up to. So the analogy I gave you guys last week was like my dog. Right? Every time I go to reach for the door, my dog tries to be the first one through the door. She has this assumption because I reach for the door handle that I'm going to open the door. She waits for no confirmation. It's basically like getting long for a swing trade, thinking, okay, here comes some massive short squeeze. They never opened the door last week. You never had that confirmation. You never got that one or two closes back above your daily 21 EMA that can trigger a little bit more of a reversal. Pretty much, guys, I mean, textbook. This is your textbook bear market bounce. The trip starts back here. They take it a couple hundred miles away from that 21 EMA. And when you get a little bit too oversold down here, the bulls kind of run out of gas. So they got to pull a quick U-turn, head back to the gas station up there at that 21 EMA. Now they got a full tank. That's basically that's the analogy of last week. That rally did nothing to change the structure, right? Didn't fix any of the problems. But what it did do is give the bears a fresh tank of gas. Kind of resets the board. And now there's no telling what they do with a full tank of that 93 octane. So, failed attempt last week. Never made improvements to the structure of your daily chart. The only improvements they made, and these are important improvements because when there's problems from the top down, we're only going to rally if we can fix things from the ground up. So they got the 15-minute chart into a little bit of an uptrend. Positive moving average cross. We actually had some buy signals. That all disappears on Friday. The 30-minute chart tried to get into a trend. They even got the hourly chart to the point where you had some signs of progress. That gap down on Friday kills all the progress they made. And as far as the Big 3 indicator goes, we almost got a full stack of sell signals. Daily down to the 15. So, that's the lesson, right? The short squeeze is scary. The Qs are up 3%. They're up 4%. Holy shit, here comes a rally. There's the bottom. You gotta wait for things to change. Gotta wait for confirmation versus the assumption the door's gonna open up. The door never opened up this week, so whether you're looking at the S&Ps, whether you're looking at the QQQ, the semiconductors, the financial sector, that's all that happened last week. Little bear market bounce towards your falling 21, and now the bears have got some fresh juice to work with. Moving on to the pieces of the puzzle, and it's the same thing. Nothing changed other than the fact that now the pieces of the puzzle, they basically reset the board, right? They got fresh momentum to work with. So the dollar pulls back a little bit, but we go into the weekend above that daily 21 with buy signals on every time frame. Daily 4-hour down to a 5-minute. Like, it's freaking locked and loaded. It starts the road trip back here. Starts to run out of gas back there, right? Quick trip to the gas station. That is your 21 EMA. kind of gives you that reset. Till the dollar breaks down here, guys, it's a huge problem for the market, right? A pullback in the dollar can trigger a few days of upside, but as long as the structure is bullish, and as long as every trip back to the gas station results in another leg to the upside, we should continue to expect to see mama market getting spanked here. HYG, same thing. Basic stuff, guys. Never change the structure. You never got 2 or 3 closes back above the 21. You never canceled out your daily sell signal. All you did was give the bears a fresh tank of gas. The road trip starts back here. You run out of gas down there. You rip, you refuel. You're locked and loaded. So that's a problem for the market, and then the volatility index might be the biggest problem here. Pulls back towards your 21. Fresh tank of gas with buy signals on the daily 4-hour, 30-minute, and the 15. So I still got to think here in the short term. VIX is gearing up for a push towards 40. So nothing changed as far as that goes this week. Day trade these pops, but as long as the VIX is above the 21 EMA with a buy signal, as long as the dollar is above the 21 EMA with buy signals on every freaking time frame, as long as the S&Ps, the Qs, and HYG are under the 21 with sell signals, don't trust these pops. Day trade them, take them to lunch. If anything, guys, you take these pops and you short them for a swing trade. Until proven wrong, that continues to be the game plan. So you got the failed attempt last week from the bulls, which now gives all the pieces of the puzzle a fresh tank of gas. Moving on here to the falling kings. No improvements last week. So as long as Apple's under 150, the door's wide open here for a move down towards your June lows. That'll take your market much lower. Same thing goes for Tesla under 265. We took profits on a Tesla short earlier in the week. But Tesla under 265, the door's open for 205, and the Big Zon, which we shorted on Friday, under 125. The door's wide open for a move down to your June lows around $100. So obviously, if Amazon pulls back another 14%, down goes the S&Ps, down goes the QQQ, down goes the ship. So no improvements there last week. It's the same thing. Apple bounced a little bit, Amazon bounced a little bit, didn't improve the structure. Just gives the bears, more ammunition to work with. So a lot of problems here, guys. Now, before we jump into the biggest of the problems, the one bright spot for the market could potentially be the energy sector. It's basically the only sector trading back above your daily 21 and your daily 50. So a few that we like here, one being LNG. We got long LNG earlier last week. Textbook stuff. Daily squeeze, rising histogram, couple buy signals. The door's open here for a move back towards 180-ish. So we're long LNG. I do think on a dip towards your 21. You could take a little nibble there. ExxonMobil's a beast, so we're not going to chase this thing. But we will look for a dip on an entry to play a move back towards 105. And then I think you've got Oxy here. Oxy starts to shape up as well. So maybe, just maybe, energy the one bright spot for the market. And for now, the structure suggests it could be. So I think any dips towards your daily 21 in names like Oxy, names like ExxonMobil, LNG, you've got EOG. Not looking too shabby. So those are the main things I wanted to cover, guys. The failed attempt to turn the ship around last week, pieces of the puzzle that got fresh gas tanks, the fallen kings, which they're looking like they got more room to the downside, and then energy. Now here's where things get spooky. I think most of you watching these videos, we're probably short-term traders. Meaning we're playing the daily ebbs and flows, we're getting long, we're getting short. When you're a short-term trader, and you're showing up here putting in the work every day, you feel every little bit of that pullback from the high at 4,800 to the recent low of 3,580. We feel all of that, right? We live it and we breathe it. we is here every day. So from that perspective, it feels like, yeah, we've been in a downtrend forever. Right? We're going on 10 months now. From a bigger picture perspective, and we're going to focus here on the monthly charts, the monthly charts suggest we ain't seen shit yet. Like the party to the downside hasn't even started. Your monthly charts, in a lot of cases, are still in uptrends. But there's some changes right now to the structure of these monthly charts that point towards, potentially, for the first time since 2008, the party might be over, and we might officially be entering a bigger picture downtrend. So here's the problems, guys, and it's throughout a lot of important charts. The S&Ps, the QQQs, Amazons, the financial sector. A lot of troublesome things brewing here in the monthly charts. So as far as the S&P 500 goes, couple of basics. Anytime we have a squeeze, if the histogram is negative and we're under the 21 EMA, especially if that 21 EMA starts to point towards the downside, the probabilities really suggest eventually that squeeze fires short. When a squeeze fires short, we're typically going to look for about 8 to 10 bars of momentum. So on a monthly chart, you're talking 8 to 10 months of momentum to the downside if the squeeze fires short. And the last time you actually fired a monthly squeeze here was back after COVID. And that worked as advertised. You got your first green dot. We got a good 10 months of cocaine-induced Fed rally. But right now, guys, we got the first negative histogram since 2008. The financial crisis didn't do that to the monthly chart. That flush back there in 2018 didn't do that to the monthly trend. Last time you saw that was the financial crisis. So for now, the probabilities suggest that this monthly squeeze wants to fire short. And with that, could become the beginning of a legitimate downtrend. Right? Up to this point, guys, nothing is taken out the trending structure of the monthly chart. That all changes if the squeeze fires short and takes us under the monthly 50. That's like the last line in the sand here. If they lose the monthly 50, that's going to trigger that squeeze to fire short. It could just take the market so much lower. Right? At that point, we begin to enter a legitimate downtrend. That could last for months. Now check out the QQQ. Granted, we're only like 10 days into October. The monthly squeeze is officially firing short. It's the last line in the sand, guys. If the QQQ can't hold the monthly 50, it's game over. You're finally putting a dent in this trend. Right? You're finally taking the cues to the point where we could get a legitimate reversal. Taking the market from an uptrend that's been going since 2008 into a brand new downtrend. Squeeze fire short, there's a potential for 8 to 10 plus months of accelerated downside. Check out Amazon. Yeah, it's gone from 188 to 114-ish. It's been a big pullback, but from the perspective of the monthly trend, even COVID didn't come anywhere near causing these kinds of problems. Like, Amazon's looking like an issue, guys. Falling monthly 21, negative histogram, you're coming out of a high compression squeeze. High compression squeezes love to fire counter trend, and now you're under the 50. Your daily chart has been in a downtrend, structure busted. Your weekly chart's kind of been in a downtrend, structure busted. This is just the beginning here for the monthly time frame. For now, the structure suggests that squeeze fire is short. Now moving on to Apple, here's where it gets interesting. They still haven't put a dent in the monthly trend of Apple. Histogram is still positive, but for now you're creeping under that monthly 21 EMA. So with the monthly 50 SMA kind of being a target here, right? The S&Ps have made it, the QQQ has made it, Amazon is under it, the semiconductor sector is on top of it, the financial sector is on top of it. Like, as you guys can see, the monthly 50 is a huge level here. You take out your monthly 50, there's nothing left. Nothing left. But as far as Apple goes, the monthly chart here holds up much better than the rest of the market. But imagine if over the next couple of months or so, the monthly chart here starts to unfold like the monthly chart of the S&Ps and the QQQ. The 21 EMA starts to slope lower, the histogram goes negative, and they drag Apple down to the monthly 50. It's about a 35-40% pullback in Apple. Again, I'm not saying these things are going to happen, but these are the most important things I think you want to have in the back of your mind. As a short-term trader, it feels like you've been trending lower forever. The monthly charts all imply this is barely just the beginning. So if the same pattern just unfolds here for Apple, down to the monthly 50, imagine how much lower the S&Ps, the QQQs are going to be, given how heavily weighted Apple is. Spooky stuff, guys, but I'm here for it either which way. So my biggest piece of advice, bigger picture, anchor to your monthly 50. If the S&Ps, the QQQs, the Amazons, etc., all start to close in trend under the monthly 50, it's game over. Game over for your bullish trend, and now the party really begins. In the short term, day trade those short squeezes to the upside, but don't look for any kind of meaningful reversal until the things on our pieces of the puzzle begin to change. Got to get your S&Ps and Qs back above the daily 21. You got to break down the dollar. You got to improve the HYG. All things they failed to do last week. So it's not going to be a dull few months here, guys. But yeah, that's the biggest thing I'm seeing right now. Monthly squeezes whispering to me, hold on tight, buckaroo, because we're just gearing on up here. So guys, as always, hope you found this helpful. For those of you in the Mastery group, appreciate you guys showing up here earlier this morning. Always good to get a little bit of your time on a Sunday. And for the rest of you guys, if you want to check out the Mastery, link is in the description as always. And otherwise, hope you all enjoy the rest of your Sunday. Take your dog for a few walks. Make sure you fully open the door for your dog. Give it that confirmation. And we'll see what's in store this week. The short-term charts point towards more downside. The bigger picture charts point towards buckle up, baby. We're here for it either which way. But that's it for now, guys. Appreciate you as always, and I'll talk to you next time.